Hi, welcome to this video, which is all about trading reversals. Now, in terms of what we're going to be looking at, two simple trade setups. One of them is to get you into a trend in motion with the best risk to reward. And the second is to trade against the prevailing trend or the big trend and look for a high odds reversal when prices have spiked too far to the upside or too far to the downside. Now, both these techniques we find really effective. They're very simple. Just use simple price action, big support and resistance levels, and we're also going to use Bollinger Bands. Now, in terms of the two pairs we're going to look at in relation to the setups, they're going to be Euro USD and Euro NOK. Now, in terms of the charts, we're going to go and take a look at them right now, but please do keep in mind, it is my view as of this moment in time. It could change in line with the market conditions. If you want all our trading techniques and our daily technical and sentiment analysis of 14 Forex pairs, including our exact levels of entry, stop and target, you can actually get live access to our member center on the link beneath this video. Now, the first trade setup we're going to look at is getting into a trend in motion, and it's going to be Euro USD. Right, we're on the Euro USD daily chart, and in terms of the technicals, we'll always do simple fundamental sentiment analysis behind the chart to get an idea of the direction the pair could go in. You can't tell where the pair is going to go longer term by just looking at the technicals. You want to know where the big money is behind the chart, so forth. You can see from my notes here, we're looking for new daily lows, then 1008, then 104.50. Okay, so a long way to the downside. You're going to do that by looking at the fundamentals and sentiment. You just do very simple fundamental and sentiment analysis. And in terms of previous videos, I explained the euro bearish fundamentals in more detail. But basically, you've got an economy nearly in recession. The US economy is doing far better. It's not doing great, so to speak, but it's doing way better than the eurozone. Also, you've got negative interest rates in eurozone, which is very bearish for any currency. They're going to make them even more negative, and they're going to print money, which is extremely bearish. US has positive interest rates. So also, if you sell the euro against the USD, you pick up interest each day, as well as possible capital appreciation. We're looking for a big move down here, okay? Now, in terms of what we've done in previous videos, which you can go and look at, we sold the euro off the 114 level. We came in at 113.65, then looked for the 20-day moving average to break. And once it's broken, we're looking for rallies basically to fail back to it, or if it goes through the 20-day moving average, to come back through it. Okay, see it there, fails, come back, fails, comes back, touches it, comes back, touches it, comes back, touches it, comes back. We had this big blue candle here. I was saying in my last video that I got the stop at 111.70, so I can look near enough 200 pips. It was a strong blue candle coming up here. So what I wanted to do was come out, take my profit, then see if the rally failed. You never know, it's a big blue candle, it could run on up to 113 or whatever. So we took ourselves out and then wanted to see if the rally above the 20 would fail and come back through it. Goes up to 112.50, fails, comes back through the 20. Our big fundamentals are heavily euro bearish. We have gone short. It's very simple. And we're in at 10 pips better off than the trade we took out. Okay, and it basically is a technique that, if you're worried that you might get a little bit more on the upside, you can do that. Just come out and then come back in on confirmation. Okay, we're back in at 10 pips better than we came out. But, it could be a little worse than you came out. You just want confirmation that the rally is over. And you've got a round number there as well. That should now provide firm resistance. Where would you put your stop? A lot of traders might stick it behind the 112 level or just behind this tail. I wouldn't. I'd give it a little bit more room because the profit potential in this trade is really big, as you can see from my target. So back behind this level, then you can see if she runs. So it's not too far from where we entered. 111.80, you can risk it to 112.80. If you really want to be sure, you could go something like 113.20 back behind the next round number. But you're not risking much, are you? yeah, 100+ pips, but you know, you're looking for it, or we are, to come down to this spike tail and keep following through, because the big fundamentals are just so bearish behind the euro. So basically a simple way of trading a big trend. And yeah, if you're new to our videos, we do all our trades in real time. We don't do hindsight trading. So yeah, I think the euro, it's a good risk to reward trade longer term. I think this one's going way lower. Now I'm going to look at one now, which is euro knock, which is really a reversal trade. So we're looking for big reversal and a correction of overbought in this instance. And this is a trade setup we'll go for a lot, because the risk to reward is just so good. So let's go and take a look at euro knock. And I'm going to look at the monthly chart very briefly before I go to the day chart, because we're coming to a really big level of resistance, which we expect to hold. Right, just on euro knock, monthly chart first. And monthly chart shows a massive level of resistance at 10. We got up there, came back. We did briefly poke through there, come back. We're just briefly poking through and have come back at the moment. Massive level of resistance. And in terms of this trade, really good risk to reward. In terms of the targets, it's 4-1 the first target over, and then 5-1 plus. See that on the daily chart at the moment. But in terms of where could we go on the monthly chart, look how we've held this 20-month average here. I think that should be the first level to go for, and then basically towards the previous month's low. It looks a really good risk to reward trade, especially when you know the sentiment fundamentals behind the chart as well. Great expected payout against risk. So let's go and take a look at the daily chart, draw levels of entry, stop and target. On the euro knock, and we're on the daily chart, of course. I've just made a note here. Didn't say it on the monthly chart, but the moving average 20-month is at 968, which almost lines up with the daily at 970, and that is going to be our first target. Now, in terms of, just to explain how we're going to do the setup, Bollinger Bands, when they widen out, indicate high volatility. You see how wide the bands are apart. When you get big vertical price spikes, they tend to retrace back to the mean. Okay. Now, in terms of what we saw on the monthly chart, 10 is a big level. Now, you don't see it very often, not recently, but high volatility moves and basically staying outside of the band, or the outer band providing support on these candles here. Now, we know 10 is a big monthly level. We poked through it there. We poked through it new high. I think that's the exhaustion of buying. So we can do that. So you get the general picture. We've made a new high, no more buyers, back below the 10 level. Where would you sell if you're bearish? I'd come straight back within the outer Bollinger Band. So basically just sell through the low, okay? Then I'd look for a reversion back to this level. You do have obviously some candles over here, but from my perspective, sorry, someone's Skyping me. I just think we're going to run all the way down to 970, but you can manage the trade obviously as it goes. I actually think we'll overrun down to that level. Where would you put your stop? 10.06 was the monthly candle before this one that poked through the most, and this one's got through to 10.02. I won't go 10.06, I'll go 10.04. So just back behind there. There's your risk. There's your potential reward. So you've got 4-5-1. Okay. Now, in terms of big price spikes, why did this one occur? It's a lot to do with what's actually gone on, believe it or not, in the Chinese yuan. Okay, Euro CNH and USD CNH, the way they've moved, have skewed a lot of the more minor pairs and given the euro a rally. That's basically behind the move. Okay, I'm going to explain it in detail here, but what it's done is it's just a short squeeze that's spilt over across many pairs, and that's going to end now. And my own view is the euro will revert to more realistic levels. And I think euro economy is bearish. Yeah, your fundamentals are terrible. Norwegian economy is not doing bad at all. We're doing better than the eurozone. Also, you've got positive carry on this one. If you sell the euro on the knock, not as good as on the USD, but it's a good carry. This is just an aberration of a move in our view, and we should see some decent downside. Obviously, manage the trade as it goes. Watch the 980 level. I've got a feeling we'll take that out. But you can always bring your stop down, and you should be able to create yourself a trade that if the 980 level did hold, you could come out with something. But I'm looking for a decent move to the downside. So that is the video for today. Two simple types of way of using Bollinger Bands. Obviously, I think if you're using Bollinger Bands, if you know the sentiment and fundamentals behind the chart, then obviously that gives you more of an edge, in my view. Right, okay, that's the video of the day. Thanks for watching me as usual. Take care. Have a good day.